Hi, good afternoon. You're watching Closing Trades right here on ET Now, and not bad at all. About a very tempered start is what we had, but we've picked up nicely, truncated week as it may be, but we're holding up a good 0.5% right now. In fact, inching closer to that 22,200 mark for the Nifty futures, expiry being tomorrow, of course, so not looking all that bad at all. Of course, today it's kudos to Reliance Industries that's single-handedly picking the Nifty up, a 3.5% move coming in on Reliance futures, 4% higher on the cash markets. That stock is now once again going back to its previous high, that of 3,000 plus thereabouts. Maruti as well has managed to clock in a fresh high for itself. You've got a Bajaj Auto which is scaling up very nicely. Adani Ports has had due contribution, and even Bajaj Finance, quite interestingly, after those 6,500, 6,700 kind of levels, this stock has been seeing consistent up move for the last 3 trading sessions at least. Another 1.5% higher, so quietly making a comeback. L&T as well looking good today. What's not looking good, of course, technology. That's the beleaguered pack. So TCS, Infosys, LTIM, that entire pack is under pressure. SBI as well is down about almost 1.5% as we speak right now. M&M not doing a whole lot, and it's flat for ICICI Bank. But Ajay, once again, it's a very stock-specific market too. I mean, Reliance aside, of course, it's moving up on the back of an upgrade. But the broader market.
In fact, almost 89 points, I was just calculating, is what Reliance is contributing. And this, mind you, is a second upgrade in a week. And both of them, interestingly, talk about the same point, that the capex time is coming to an end, and now the bearing of that capex, the bearing of fruit for that capex will start happening, and that triggered the move. But today, interestingly, after a long while, we're seeing the beaten down NBFCs. 6,200 was that low. In Bajaj Finance,
I stand corrected.
but your direction was right. But look at how other beaten down NBFCs also come back. iifl Finance locked on a circuit, JM Financial. These are the two. These other three, I'll say, NBFCs where regulatory glare was very clear. So all of them have come back very nicely. But advanced decline in broader markets is very good. In fact, today's 1.5% up move in the small cap adds up to 8.5% rebound from the 14th March lows. 8.5%. Almost 7% rebound from 14th March lows as far as the mid-cap end of the market. So clearly, going into the financial year end, people are loading up, and the peak of pessimism perhaps was the mid-March. But we'll take that discussion forward with Nuresh and Kunal, and Sunil Subramaniam is also here with us. Gentlemen, afternoon. Sunil, let me start with you. Mid-cap, small-cap got beaten out of shape between mid-Feb and mid-March. And I think we were discussing that when you were around last time. Many of them, more than 50% of the index was down 20 to 50%. You think the worst of that is over now in the small cap, mid cap, and value buying is emerging?
So I would put it like this, that see, so far from a pure earnings growth perspective, the mid and small caps have not disappointed. Okay, first point. Second is, with a strong economic growth, GDP numbers coming stronger and stronger, I think that the times ahead are good for mid and small caps, right? Now then, what was the cause for a correction at all for you to see whether there's a time to buy back? Right, I think that it was driven by, first of all, the correction was overdue, I would say, because so much liquidity was there chasing this good story, partly because of this whole SIP approach that distributors had taken to allocation to mid and small caps, that consistently every fund manager kept getting money flows. So they widened the basket. So what happens is that naturally, when you go for a quantity, quality tends to get diluted a bit. So a lot of stocks which got valued much higher than what a fundamental would show, right? Now, as long as the liquidity support continues, these higher valuations can continue. But that's when at the same time, because of these stocks and a whole lot outside the index also has gone up, like the penny stocks. So that's when SEBI's caution to the fund managers. Remember, SEBI just spoke about the froth. They didn't say anything about the retail investor directly, but they asked the mutual funds to take some action to ensure adequate liquidity in their portfolios. Now, that news was then to be made public by mid-March. And so there was uncertainty around that. And fund managers naturally also probably tried to answer SEBI by saying we have enough liquidity, though there was probably some selling in small and mid caps which had run up a lot, and that would have moved to large caps. So this was a trigger of liquidity suddenly getting a little bit slowed down because of that situation. Now the SIP book continues and there's buying. And so that's why if you see the correction, though it happened in that 1 month, it can't sustain because every month fund managers out of the 19,000 crore SIP book, 8.5 to 9,000 crores is in small and mid caps. So that buying power will contain. So the point is, I would say, is that going forward, two things. One is the quality stocks, even if they are slightly higher valued, will continue to get more buying. But there could be a separation of the dust from the chaff, as they say. And so you would see some amount of selling pressure in the lesser quality, perceived lesser quality stocks, or those which went up purely because of liquidity. Now, so I would say that this divergence will continue. So good quality mid and small caps will continue to get superior valuations because the anticipation of a better earnings growth cycle. So then come April 10th onwards, when the new earnings cycle starts, is when the reevaluation will start. And so from mid-April to mid-May, you will see the earnings cycle play out and they will see how these companies are stacking up vis-a-vis what each one had projected. And if those numbers actually come out better, you could see better buying come up. So I would say that the continuing liquidity support and the fact that the liquidity data that was released about mutual funds was by and large comforting. There was no cause for anybody to worry. There is no panic situation as far as mutual fund holding of small, mid and small cap. They have adequate liquidity and adequate, and the concentration risks are well managed. So I would say that it was a storm which was partly a result of excess liquidity coming into this segment. Things have now, dust has settled. A lot of stocks which went up a lot have corrected a lot too. So now I would say, but still for the next another 15-20 days, till the earnings cycle starts, it would still be a more stock specific, wait and watch, observe the whole thing go. But once the results come out and you get a reinforcement of the earnings growth of specific companies in the mid and small cap, people will go and buy them because we are talking about at least a 3 to 5 to 7 year long business cycle. And mind you, we are in a situation where private capex has really not started yet. So if that starts, all these mid and small cap suppliers to that. So I expect the cap good story and those stories to have a sustainable growth path. So I don't see that from a medium term allocation to mid and small cap, especially through mutual funds, there's any cause for worry. SIPs and STPs, as always, should be the better way to acquire mid and small cap because naturally they are inherently more volatile. So when you do an SIP route, rupee cost averaging comes to your benefit. So
Absolutely, Sunil.
That's the way.
That's your take on the broader markets. At least for now, you believe that the storm has passed and the dust has settled. But Kunal, does that seem to be the case? Do you think that the storm has passed when you talk about the broader markets in particular? Also, Kunal, I was just checking the data when you talk about the sectoral indices. And one sector that actually stood out was the realty index. Right? It was a star performer over the last 1 year or so. In the last 4 trading sessions alone, 7% up move come in the realty index. Do you see this one also now trying to be one of the sectoral leaders?
Well, yeah, looks like. I think so. The sheen which had gone off for the real estate stocks, I think would probably have made a strong comeback. So, and I think what I like about the move this time around for real estate stocks, that we are not too much dependent on the the 2 or 3 names which were the leaders first. So, for example, DLF was one of the prime movers which managed to lead the rally. And then there was a slew of other performers which managed to chug along. But then you look at the last 10, 15 days of price performance, specifically from the mid of March when the bottom formed for the mid caps and the small cap index. That's where you see a class, a complete differentiation in terms of the outcome for the real estate stocks. Oberoi Realty is one of the stronger names which has emerged as a trend reversal as well as a recovery stock from the real estate pack. DLF has also managed to move up higher by a margin of I think 8 to 9% approximately. Then you have Prestige, Sobha. These stocks have also managed to chug along quite well. So I think it's now the leaders for the recovery for the real estate stocks that have changed, and I think that's a positive sign for the index as such.
Right. Well, the one positive mover for the index, which is surely doing its magic, has been Reliance Industries. In fact, we'll get you more details on what the Goldman note actually has to say about RIL, but they've maintained a buy. They've upped the target price all the way to 3,400. Naresh, on the charts, what's the reading? It's almost closing in on 3K already, but when do we see a meaningful move all the way to 3,400 in your view?
So technically the setup is there. If we look at the recent highs, we made almost 5 to 6 attempts around that 3000 mark where the stock stalled and corrected down to 28.25. Today also we've come close to that 3000 mark. Sustaining 3020 would actually open up a target price of 3300, 3400 in a short to medium term. So the structure is there. Today's price volume action is very positive. So going forward, it becomes a buy on dips stock also, and at current levels also looks interesting. I would have a target price of 3300, 3400 in the short to medium.
To tell us exactly about what the Goldman Sachs note on RIL is and what gives them conviction that the stock is going to climb up all the way to 3400.
Well, for Reliance Industries, if you see, the important point to note here is that this is the second big target price hike that has come in from a foreign brokerage in less than 1 week. Now, earlier it was UBS which had increased the target price on Reliance Industries to 3,420, and today Goldman Sachs has increased the target price on Reliance Industries to 3,400, which is a 16% hike. Now, the reason why Goldman Sachs has hiked the target price is because they are believing that the capital expenditure cycle of Reliance Industries has peaked, and going forward, the capital expenditure, whatever Reliance Industries will be doing, will be for short gestation period, which means that the capex to EBITDA turnaround will be much faster for Reliance Industries going forward, and hence for such a big company like Reliance Industries, they are still expecting that EBITDA to grow at a CAGR of nearly 17% over FY24 to FY27. Now, given the fact that capital expenditure has peaked, the brokerage is also expecting the company's return ratios to expand going forward, and in past we have seen a rally in share prices of Reliance Industries only in only two times, and that is one, when the return ratios of the company expand, and second is when the company goes ahead and does some dilution in their stake sales and raise much more funds. So both these factors are the key catalysts for Reliance Industries, and one of them is expected to happen soon, and hence Goldman Sachs has upgraded the target price, and they are saying that if going forward Reliance Industries goes ahead and does some stake sale and does some monetization of its assets, then again that could trigger a fresh rally in the share price of Reliance Industries. And at this moment they are saying that the risk reward is also favorable, given the fact that despite the 23%, 26% rally that we have seen in the last 6 months, the valuations are not expensive. They are at par with their historical averages for Reliance Industries.
Thank you for that, Soumit, for exactly outlining what Goldman Sachs has to say for Reliance Industries being among the top gainers on the Nifty, aiding the Nifty in today's rally at least. But on that note, we'll slip into a break on this edition of Closing Trades. When we come back, there's lots more stocks to discuss about, lots more news to cover. Don't go anywhere.
All right, let's move on and also put the spotlight on names which are buzzing with high volumes in today's session. Ansh is joining us for more on that. Ansh?
Right, so we'll start with STDM first. Stock seems to have given a breakdown from its upward sloping channel with volume of over 23 times its 10-session average volume, and it has also touched 2-month low level as well. Apart from this, ABB India will be in focus as the stock has touched record high level with volume of over 2.5 times its 10-session average volume, and it has formed higher highs for 5th consecutive month. Lastly, Infra will be in focus as stock has given a good breakout from its falling wedge chart pattern with volumes of over 2 times its 10-session average volume, and it also trades above key DMA levels. So keep an eye on the stocks.
We'll get back to you because we also want to take stock of how D Street's performance has been in FY24 with you. We'll just get back to that. But in terms of the volume movers, ABB clearly is right on top there. About a 6% notch up coming in on this one. Of course, there was a brokerage note as well coming in, right, Ajay, this morning on ABB?
Yeah, that's correct. There's a major upgrade which has come in, and this is actually, in line with what's happening in the capital. Remember, just a while back, Cummins India management came out with a very massive upgrade for their business outlook, and the stock ran up almost 7-8% that day. We even interacted with the management. Now ABB, UBS believes that despite of the slightly higher valuations, it's a very integrated kind of a play as far as the electrification of the Indian ecosystem is concerned. And the new target is almost 30-40% higher, and that is powering. Look, it's an F&O stock, by the way. So that's something to watch out for. Kunal, how's the volume? Is the move coming in on the back of fresh long position addition, and what's the data looking like in ABB, if you can check for us?
So the volumes are good, but they're not great enough because the bigger chunk of volumes for ABB actually happened in the mid of Feb. That was a point when the stock had clocked, I think, 45 lakhs in terms of daily volumes 2 consecutive days, and on that day I think the stock moved from 4,500 to I think 5,500 in just 2 days. So almost a 20% move was seen on the back of some extremely high volumes for the stock. Today's volume so far is just about some 10 lakh, 11 lakhs on the NSE. So that itself tells you that it's a rise on slight lower volumes, but then this is what typically happens, that a big buyer enters into the stock at a much lower level, and then once the stock moves up higher by a margin of 20%, it just adds to the cushion price for the stock.
Sunil, I just wanted to understand, how is it that you think one should now capture in on this entire electrification theme which is playing out currently, and I mean the larger capital goods umbrella? Sunil?
Yes. I think the best way is to put into diversified funds. I think it's largely the power sector story is a mid and small cap story, right? So one option is to go in for power sector funds. But I would say because there's the extreme cyclicality, people may not know when to book profits and to move out. So better to rely on a bunch of large and mid cap and multi cap, and and with a little bit of small cap and mid cap in the portfolio, because most of the fund managers are positioning their portfolios with a heavy tilt towards capital goods, especially with the longer end of the curve. So I think the quality selection of these stocks, what is the right price to buy them, when do you book profits, is best left to the fund manager. The second aspect is, given the fact that that's a volatile sector, right? SIPs and STPs would be the best option. So I would say stick to multi-caps broadly as a category. You will get your adequate exposure to power, and to the extent possible, you stagger your investments over the next few months, because it is truly a long-term story. And hence, for you to reap the rewards, you keep buying on dips, which again, when you give an SIP to a fund manager, he will choose the right prices to buy, which is effectively to buy on dips. So I would say, no, rather than venture into your own saying this power company will do better than that and this is the right price, I would say leave it to the expertise of any fund manager for that.
Ansh, in fact, is waiting by to tell us how FY24 has been for D Street. So let's take stock with Ansh once again. Ansh?
Right, so this financial year, Nifty, Nifty mid-cap, Nifty small-cap, all three registered its biggest single financial year gain in over 20 years. Also, all indices touched record high levels as well. Nifty gains around 27%, having Tata Motors, Bajaj Auto being the top gainers, gaining by around more than 130%. Losers are only UPL, HUL and HDFC Bank in Nifty index. But if you talk about other broad indices, both mid-cap and small-cap are also in green. They are up by around 60 and 69% respectively. And around 90% of both mid-cap and small-cap stocks are in green, with 20% stock delivering return more than 100%. Let's shift our focus to sectoral indices as well. And here we are seeing Nifty Realty as the top sectoral gainer. It even touched record high levels this financial year. Actually, all indices touched record high level except for Nifty IT index. Now here we'll see that Nifty PSU Bank index is advancing for fourth consecutive financial year, gaining more than 85%, whereas Nifty Bank 2 advances for fourth consecutive session. Let's also talk about market cap. And here we are seeing India's market cap for stocks in FY24 has increased by around 123 lakh crore, out of which Reliance, Bharti Airtel, TCS and LIC and Tata Motors have contributed the most by around 13 lakh crore, which is more than 10% of the total market cap addition. So overall, this FI is marking a history by showing us moves not seen in decades.
Right, Ansh, thank you for taking us through all the winners and losers in the year, or the fiscal year of FY24. Coming to you, Nuresh, and in that, definitely one of the top losers was HDFC Bank. Do you think FY25 or at the start, once you start FY25, things will look better for HDFC Bank in particular? Because I'm sure a lot of them have been waiting for this one to turn around, and the turnaround has not taken place at all.
Interesting times for HDFC Bank, and if we look at price action, one difference of late has been the stock has stopped around that 1350, 1400 mark. It does not correct sharply. And if we go back to the history of the last 4 years, pre-COVID, the stock used to have a top around 1300. Post that in 2021, it made a bottom around 1350. Then post the merger, pre-merger, bottoms are around 1300, 1350. Very recently, we made a bottom around 1350 levels. So out here at 1430 odd levels, you have a stop loss below 1350. And if this is making a turnaround, it could go all the way back to 1600, 1700. So the risk reward is in play. Price action would confirm if it sustains about 1470 odd levels. But looks like the next year could be better for HDFC Bank compared to the last 3-4 years.
Right. Sunil, I want to talk to you about a sector which perhaps you understand so well because you've spent almost upwards of 25 years in that sector, asset management. A bunch of companies are now available. Even some of the wealth management companies pull up how Nuvama is actually trading in today's session, almost 12%, big breakout. But there are a bunch of other AMCs, Prudent is there, wealth management companies are there. I want to talk to you about not these stocks, but the market. There is one section of the market which believes, I remember when we were chatting, SIP figures had crossed about 15,000 crore. Now it's knocking on 20,000 crore number. Does it appear structural to you? And either wealth management companies or AMCs or some other market infrastructure kind of stocks should be there in the portfolio. Do you have that visibility?
No, absolutely. See, this 19,000 is also, I believe that this could double in a year's time. See, what's happening, the mutual fund, today you have just 3.5 crore folios in mutual funds out of a 140 crore population. India's mutual fund assets as a percentage of GDP, as a percentage of household savings are all in the single digit, maybe low double digit in some particular pockets, right? And you have a situation where I think I saw some recent data which said that 10% of the country's population controls 75% of the nation's wealth. Now, it's such a concentration. So on a 140 crore, you have 14 crore people who have 10% of the nation's wealth. Now, that amount of money, right? Now, what's going to happen? Yes, they can spend that money, but how much can you spend? How many houses will you buy? How many fancy cars will you buy? So at some point of time, it has to filter into the savings bucket. And when people are wealthy, right, they're not satisfied with just a steady rate of return from a bank deposit. They know that they have earned their money. They know that they are more than adequate to keep their lifestyles going for the next 50 years. So they want to capitalize on opportunities, right? So some of them go into AIFs and high-end PMSs. But if you see there, a core part of it is filtering in as an alternative to bank deposits. Now, just around 2010, I think, right, the mutual fund deposits as a percentage of the banking system was just 13.5%. Today, that number has touched 27%, which means doubled. But you still take it in comparison to the United States or any developed market, is still way below. So I think that the mutual fund industry, along with its wealth management arms, like, you mentioned a few companies there, those which have direct access to customers, have a phenomenal glide path ahead of them just from the penetration story. And the fact that, bank deposits, ultimately don't beat inflation. That's a fact that everybody knows and realizes. It's just that the regularity of that income is smoothing. But you're already seeing banks under pressure on the CASA, on the deposit front, because they are beginning to lose money to mutual funds from their depositors. And the fact that banks themselves are among the largest distributors. So what they are themselves doing is, in order to keep their customers happy, they're also shifting away from deposits into these mutual fund related products, right? AIF, PMS and mutual funds of their customers' money. So the fact is that this is an inexorable rise, right? And I see the penetration story and this rising at a much double probably the nominal GDP growth rate will be the growth of the overall wealth management space, where mutual fund asset managers as well as wealth managers, wealth for distribution firms, all of them will have a part to play. So I think that these are the core story of the Indian economy, the savings potential. And let's not miss the fact that as a country, right, the financing of our growth story, the capital market has to play a big part. So the government also, I see, that will be nudging and encouraging this, because banks can't be financing our entire growth. Then you inevitably go through this cycle of super rapid growth, cycle of NPAs back again. The capital markets are much more efficient distributors of capital, and they know when to give it and when to take it back. So I think that the country itself in its growth path has to get the capital markets more as a part of the financing of our country's growth rate. So I think that this overall story on the savings side, right? I would say savings is a broader basket. It's actually an investment side, right? It's a long-term structural story as the penetration. That's where the whole distribution network, the air efforts in promoting SIP, the AMFIs with this mutual fund Sahi campaign. Now our companies also run an SIP Sahi campaign. Things are promoting the penetration in such a rapid manner that I would say we are going to be, doubling it in every 4 to 5 years, I would say.
Absolutely. Great having you, Sunil, and great, getting all that perspective from you as always.
Thank you.
Okay, on that note, we're going to take a quick break. Still holding out, still Reliance leading the way, 100 points up on the Nifty. Closing trades right here in ET now. The closing trades are looking comfortable, but what's also on is IPL, and the brand has even become better and bigger in its 17th year. So Sharad is here with some statistics on IPL since its inception in 2008. Sharad?
Well, interesting take on the data. The IPL's valuation is, do remember, it's a decacorn now. Now, decacorn is something which is having a valuation of more than $10 billion. Now, of course, the brand levels, that has gone up almost 5 times since its inception, which was in 2008. Now, of course, over the last 3 years itself also, the valuation has actually gone up. It was roughly below $5 billion in terms of brand, and that has picked up in just 3 years in 2024, coming near the $11 billion mark. But the question remains is, which is the most valuable IPL team currently? And of course, there is no doubt it's Mumbai Indians, $87 million. And of course, they have won the largest number of trophies, sharing with CSK as well. The valuation part, of course, CSK is having almost $81 million when it comes to their brand value. And also the shares of this company actually trades in the unlisted space as well. So that will be very interesting to watch out for. KKR coming from SRK bandwagon, $79 million of brand valuations coming in, followed by RCB as well as Gujarat Titans, which is just 2 years old, but still look at the valuations. That's coming at roughly $65 million. Apart from this, also on the lower end, also if you look at it, Delhi Capitals is there where JSW Group has holding, and also Rajasthan Royals, they make it to the list with a $63 million of brand flows. Also Sunrisers Hyderabad, of course, this is actually taken apart in the financial numbers, and it is shown when it comes to Sun TV network. And interestingly, Lucknow Super Giants is also part of RPSG Ventures as well. And lastly, Punjab Kings come last with almost a $45 million valuation. But do remember, these are the brand values which are there. And overall, it's still a huge number when it comes in a combined basis of $11 billion.
Sharad, thank you so much for that. And 17 years, Aisha and Ajay, since this IPL has been on for, you've seen the rise coming in, the valuations for these teams per se. Mumbai Indians, is it? That you are rooting for?
No comments, but I can just tell you that I was there, I think, for the first year. It's been as grand as ever.
Clearly, this franchisee has gone from... In fact, everything was very planned. Straight from the founder, whom I shall not name, had the big idea of making India a hub of sports franchises, just like they have the Super Bowl and all of that. It has gone in that direction.
Absolutely.
Investors have made money. There are actresses who invested small sums, and now they are owning $500 million worth of, I'm talking about Rajasthan Royals and many others.
Yes. And we've seen a lot of these, a lot of other nations also replicate the sport as well.
Yes.
I believe we have
Middle East also.
Yes, Middle East as well. I believe we have Asta here, since the IPL fever has already gripped the nations. And in fact, the tickets for most of the matches have been sold out. And that's just for the matches that have been announced so far, isn't it, Asta? I believe the tickets for the select matches, they are selling at a premium as well, Asta, isn't it?
Yeah, that's definitely true. IPL 2024 tickets have witnessed the demand like never before. About 90% of the tickets are sold out. Every stadium up to starting from 1st April till 7th of April, everything is sold out. According to the Paytm Insider also, which is the official site of the IPL ticket booking, also says that 85 to 90% tickets have been sold out. Even people are trying to get in queues for the tickets for the IPL. Even that is not happening. 85 and 90% of tickets have been sold out. If we talk about the Mumbai match, the first Mumbai Indians versus Rajasthan Royals, which is happening in Mumbai, have been 90% sold out. The average cost price of Mumbai cricket match is 15,000 to 20,000, and the rest of the matches, the average pricing is 1,000 to 20,000, and it keeps on increasing as the demand for the tickets is increasing per se. People are literally struggling to open sites. The Paytm Insider site is crashing, Book My Show site is crashing. People are trying to book their tickets, but obviously 85% tickets are sold out. And majorly the interest of people are seeing, according to the site, which is stating that Mumbai Indians, KKR and CSK are witnessing the top matches which are sold out. Even some of the matches have been removed from the sites because they are sold out. The queues are filled, and this is craziness going on for the people, as it's so much crazy air happening around the IPL. So rest of the matches are sold out, and well, it's a starting. Let's see what happens when we get near the semi-finals and the finals.
Sudeep Bandyopadhyay is also joining us. Thanks very much for that. Sudeep, let's talk about some other matches apart from IPL, which is happening in the market, and Bulls are clearly leading right now. So it was a very short-lived and swift correction, if I might call it, now that we are a rebound, 8 to 10% on mid-cap, small-cap from March lows. Did you participate in cherry-picking in these last 2-3 weeks in your portfolios or in your clients?
Well, Ajay, I've been advising clients to do that. In fact, we were very clear that the long-term secular trend is positive. Structurally, nothing has altered. It was just a phase of profit booking, consolidation, whatever name you call. And in some cases, a little bit of froth also was there, which was going out of the market. So it was par for the course after such a huge rally over an extended period of time. Some amount of consolidation is definitely welcome, and it's good for the health of the market. So, we were pretty confident that we are in a structural bull phase, and we will keep inching upwards. Medium and long-term trajectory hasn't changed at all. So absolutely right, Ajay. But having said that, I will also, put in a word of caution. Today, tomorrow, I think a lot of adjustments, a lot of year-end transactions are happening. We also have this, the index closures and all that. So I think we have to be a little careful, and we have to take today's and tomorrow's rates with a pinch of salt. That doesn't mean that I don't believe that the markets will move in a positive trajectory. It just means that today and tomorrow, a lot of transactions are happening, will happen, which may not reflect the true spirit or true the value. And we will probably get to see the real picture from 1st April onwards.
The litmus test. But Sudeep, dodging the ball here, tell us what is it that you bought in the recent decline, even if a sectoral color is what you can give us.
No, Aisha, I've been positive, and I think I've been talking in your shows as well, that infrastructure, construction, I think that remains my favorite theme. And I believe that's a story which is going to run for a very long time. Look at the capex. I think it's a huge.
I'll try and connect with you back. We're facing some audio issue with your connection. In fact, on that note, we'll try and get him. Try and get Sudeep back online. But before that, we'll slip into a break on this edition of Closing Trades. When we come back, we'll talk about markets, which is actually currently off the day's highest point.
Guys, I'm getting my new bike tomorrow.
Great! Now I will come with Rohan every day.
Do you have insurance? What do you think? I have insurance, PUC, everything.
I was talking about life insurance for Sia.
Oh.
Jokes apart, guys. Life shouldn't be all pleasure today and pain tomorrow.
Yeah.
Seriously, life insurance is necessary.
LIC's new Jeevan Anand gives you double benefit, full payment on maturity, and life cover continues lifelong.
Hey, hello. Do you have insurance?
Powered by Pernod Ricard India. Driven by Maruti Suzuki. Co-powered by Dream Sports. Make sports better. Knowledge partner Amrita Vishwa Vidyapeetham. Come become. Associate partner LIC. Har pal aapke saath. Outdoor partner Tim Delhi Airport Advertising Private Limited.
Revolt, India's #1 electric bike. Built for Generation Y.
Dark is here to rule, presenting the new Tata Harrier Dark Edition.
First of all, there is inflation, and on top of that, fluctuation in foreign exchange prices. Keeping all this in mind, how do I plan my investment portfolio?
We invest not only in other asset classes, but also in commodities via commodity derivatives.
What is the benefit of that?
Commodities are a natural inflation hedge that protect your investment portfolio from inflation. Internationally referenced commodities also protect you from appreciation in foreign currency.
यार इतनी बड़ी एमएनसी से एक्सपोर्ट ऑर्डर मिला है, बस थोड़ी फंडिंग की कमी है।
हम सब दोस्तों ने बड़ी मेहनत से ऐसी गुडविल बनाई है, इस अपॉर्चुनिटी को कैसे जाने दें? कुछ तो सॉल्यूशन होगा ना?
है ना, हमेशा साथ देने वाला एक सच्चा दोस्त।
मतलब कि सच्चा दोस्त वही जो हमेशा आपका साथ दे। MSME लोन्स फ्रॉम IDBI बैंक। बैंक ऐसा, दोस्त जैसा।
Things have changed dramatically, and of course consumers have changed too. They've become very experimentative. No longer is it about functionality or for buying the products. It's about aspiration. And that, I believe, is the biggest change. The aspiration of India is, I believe, the biggest change that has happened. And that is reflected in the cars which we purchase, in the products that we aspire for, and of course, in the volumes that you see in the different industries.
And though, Shashank, you're making it sound very simple, but I think there is this dichotomy that people always think. Maruti has a lot of reputation. There is such a brand recall, dependability, people trust it. The first car has to be a Maruti. Now, with the market opening up, with the kind of players we've had, and like you yourself said, at a point, cars were more about functionality till they became also aspirational. You have a new generation that is looking at multiple features, things keep moving, new players keep coming in. So to have that, tightrope balancing act of sticking with that brand value, that reputation, safety, and still be, forward looking. How does that happen?
Yeah, so a beautiful question, because that's one of the big problems Maruti Suzuki has been grappling with. The Maruti Suzuki has been known for, as you said, dependability, reliability, value for money, low maintenance cost, great network, and so on. That is, of course, great for people who are looking for functionality. I remember in all these years, the Indian consumer has not been so experimentative. So these are the values which any consumer was looking for: fuel efficiency, low maintenance cost. And as Indian economy grew and our GDP grew, income levels grew, disposable income grew, aspiration came in. And we saw India, the new India. It is younger, more tech savvy, more aspirational. So in our automobile world, we started looking at two different sets of consumers. One is what we call Bharat, which still has a very high percentage weightage when it comes to buying criteria on functionality, on fuel efficiency, maintenance, etc. But there is also India, the young India. So you have to cater to both, because India is getting bigger and Bharat also continues to expand. So you have to do both. You can't do it with one brand. So we, around 2015, said, if we want to address this more aspirational customer, let's start a new brand called Nexa. So we started with Nexa. It had all those values which we stood for, but more. It was about creativity, it was about innovation, that reflected in the design. It has reflected in the type of communication that we do. It is also reflected in type of technologies that we use. So we are now changed. In fact, just for the information of people here, Nexa, if it were as an independent brand, would be the third largest manufacturer in the country, after Maruti Suzuki and one more. So it's become very big in the last 8 years, selling in excess of 600,000 now in this year. So I think it's been a great journey, and we need to push this image part, the aspect.
Powered by Pernod Ricard India, driven by Maruti Suzuki, co-powered by Dream Sports, make sports better. Knowledge partner Amrita Vishwa Vidyapeetham, come become. Associate partner LIC, हर पल आपके साथ. Outdoor partner Tim Delhi Airport Advertising Private Limited.
Maruti brand, how has that happened?
Yeah, so very challenging, because as you can imagine, we are a legacy brand. We have been in the industry 40 years, and it is not easy to change that image. That image is also very good. It's not a bad image. It's actually very positive. So if you talk to other brands, they'll say, we would love to have that Maruti Suzuki image of reliability, of value, and so on. But we also have to take care of the changing technologies, the changing consumer itself. In fact, the process of buying itself is changing. You have ownerships changing now. People looking for subscription, people looking at shared mobility, people looking at part ownership, and so on and so forth. So we have to constantly evolve, and that has been the biggest challenge. So the digitalization which has happened, which we have embraced in a big way, it requires, first of all, a big mindset change. And that's what we have tried to develop in our organization, a culture for embracing that change. Because, as you said, one of my favorite quote is, if you...
Oh, we could have heard the quote at least. So, Shashank is actually quite a philosophical guy. He loves dropping quotes and all of that, being from Bhopal, I think. Well, let's come back and talk about some specific stock ideas. I was discussing the charts of IIFL Finance, which crashed in the middle of a massive panic, regulatory action, to 320 odd. Today has come back to 350. How do the charts look like? Constructive, Kunal?
Yeah, they're very constructive. So, the selling in the last 10 days, I'm not talking about the selling which happened on the back of that sharp cap down, but the selling in the last 10 days was on the back of much lower volumes. So the cumulative volumes for the stock in that selling was almost 80 lakhs to 1.2 CR for the stock in the last 8-10 days. And today's volume itself is almost 80 lakh plus for the stock, which means that entire selling has been absorbed. And today's rise is a clear indication that a major bottom is now in place for the stock. Then we look out for the next or the first set of targets for the stock. And that happens when the first circuit was opened for the stock. And that was, I think, 383, 380 levels for IIFL Finance. That becomes the first set of targets on the upside.
Right. A lot of other names which are in focus. We were chatting with the management of L&T as well, although just one key vertical. But L&T Construction has won multiple orders worth about 2,500 to 3,000 odd crore rupees for buildings, factory businesses in the domestic as well as international market. And Ajay, just what they were talking about today in terms of the potential from the Middle East region and the kind of order book visibility that they have and across segments, considering L&T is a conglomerate.
But I must tell you something. I mean, I remember a year back, I was talking to Mr. Nayak around it. If you have to play Middle East growth, just like India, today somebody was telling us that Saudi Arabia is planning a 2040 vision, just like we are having a Viksit Bharat by 2047. They have a new Saudi Arabia vision of 2040. And if there is one company which is a direct play on India as well as Middle East, then that's L&T.
L&T.
30% of revenues are coming from Middle East. Many other companies are also doing well, but they have a smaller contribution coming in. Kunal, this 37,3,800 level, as we were discussing, turns out to be, last time we retreated from that level. Do you think it will get crossed this time?
So volumes are a bit okay for the stock. So I would probably expect the stock to consolidate over here for some more time. But the stock rarely gives that opportunity of a correction. So a 10%, 15% correction for L&T historically has proven to be a very good entry point for the stock. So I think it corrected from 3,700 odd levels to 3,350, 400 mark in the month of January, February, first half. And from there, the stock has come back to the 3,700 level. So it's not like a V-shaped recovery, but more like a U-shaped recovery. But very rare chances that the stock gets into a correction. So I think the best strategy over here is that even if it's a 5% odd correction for the stock from the previous swing highs, that's a good enough starting opportunity for someone who's missed out.
Sudeep, do you concur with that view? Any price is a good price for L&T for the long-term players, of course.
Absolutely, Aisha. In fact, in the earlier segment, when you were asking me about stocks, I was going to mention that L&T has been one stock which I have been buying and recommending buy for a very, very long time. I think, Ajay was absolutely right. It's a play not only on India growth story, but also on the Saudi Arabia growth story. I think, they are one of the most respected construction companies, infrastructure companies in Saudi Arabia as well. And with Saudi Arabia rebuilding and building itself, L&T is getting multiple opportunities of participating in that growth. Also remember that these are contracts with better margins. In case of L&T, the earlier low margin contracts are getting exhausted, and that's good for the margin profile of L&T overall. I think going forward, you'll see a L&T with a much better margin profile. Also, remember this hydrocarbon infrastructure, hydrocarbon capex also has picked up in Middle East, and that definitely again is helping L&T because they are a recognized player there as well. So considering everything, considering the way Indian government is spending money in infrastructure, Saudi Arabian government is spending money on infrastructure, I think you can't go wrong with L&T. If you have 1 year kind of time horizon, even at 3,700 level, there's absolutely no problem in buying L&T.
Problem in buying L&T as well. And in fact, what's interesting, Aisha and Ajay, no doubt we did speak about how West Asia, Middle East is very crucial for our Indian companies, and we'll just in a short while play bites of the companies. But today, interestingly, you had two other companies also talk about Middle East. One is Gensol Engineering has named a new CEO for the Middle East business. As well as you have RITES, which has opened a new office in the Middle East as well.
PSUs?
Yeah, PSUs as well.
Interesting.
So yes, definitely Middle East is the talk of the town or the flavor coming in for the Indian companies. But here are what the Indian infra players had to say about the golden opportunity that they are witnessing in the West Asian region, L&T, KEC International, as well as V8 Wabag.
Businesses where we are really focusing in the Middle East are, as I said, hydrocarbon and solar park and related energy storage solution projects. Here we see an opportunity of almost close to about maybe $50 to $60 billion of prospects over the next 3 years. $20 billion roughly per year is the kind of pipeline we see, and it could grow even further. It depends on how the oil prices remain, where the oil prices remain, and how much additional capital gets attracted to these sectors.
T&D is growing very well. Part of it is on the back of global shortages also, especially if you look at the North America market and more specifically United States. That was a market which was actually earlier served by Turkey and China. Today, with all the geopolitical issues and other problems which these countries are facing, most of the demand, whether it is for transmission towers, conductors, or even insulators, has now shifted to India. And clearly, the way they are looking at the development of NEOM and all the renewables, especially in Saudi, UAE, and now even in Oman, I think these are the three countries where we are seeing a lot of demand coming in on account of energy transition. One is for solar projects and also for transmission projects.
We see desalination, wastewater treatment and reuse as being a very, very big set of drivers in this region. If you look at the sizes of projects that we see in the Middle East, nothing less than 400-500 MLD of desalination plants. So the sizes that we see there over the next 3-4 years, at least on a visibility projects that are now announced are close to 3-4 billion in various stages. I would say RFP, pending RFP, we have already put out bids for close to $1 billion of projects in the region or working on projects which are in this set. So for us, this is a very, very key market, and we see this only going up in the next years.
Okay, that's a slice of the Middle East opportunity and what it means really for investors, three of the companies that we did profile. But time to wrap up for the day. Let me just quickly take it across to our charters, get in some BTST trades before that. Kunal?
So I'll go with two buy calls. The first one is about Max Financial Services. That stock is looking very attractive. It's closing in towards a gap which was created a couple of months back for the stock. So buy with a target of 1045, stop loss at 994. And Jyoti CNC is the other stock which is looking very attractive. That stock was trading almost at 775, 780 levels. Excellent volumes and strong pickup in terms of trends. Would suggest a buy. 825 immediate target, stop loss at 760.
Right. Naresh, what about your BTST ideas?
So first would be a buy on Indian Hotels, good momentum here, stop loss at 583, target price of 600. Second would be a buy on L&T, momentum again here, stop loss at 3690, target price of 3800.
Right, okay, just 30 seconds left to go before we wind up for the day. But Sudeep, good to have you on the show as always. Kunal, Naresh, we'll see you again tomorrow morning. But we're winding up off the day's highs, but still in the green, considering it was supposed to be just one of those very muted, sideways kind of session. It's not done bad at all. 0.6% is the kind of move that you've seen. Thank your stars to Reliance Industries. 3.5% is the kind of move that we're closing the day with. HDFC Bank as well did not do all that bad today. About a 1% uptick coming in there. There was M&M, Maruti, Bajaj Finance, Bajaj Auto, Axis and even L&T, which have contributed a fair bit to today's move. From within the broader end, ABB after that brokerage upgrade, almost a 6% tear up on that stock. Siemens, Metropolis, Naukri have all been winners today. On the losing side, of course, technology as the pack was, was under. There was also REC, which was down about 3.5%. NMDC, 2.5% lower there as well. Jubilant Foodworks was a drag, as was the case with PFC as well as Colgate. Done for the day, but tomorrow is another one, and we've got expiry as well to deal with. And then, of course, it's the last trading day for this week. So we'll catch you again tomorrow morning at 8 a.m.
If you like this video, then like, share and subscribe to ET Now.